What is up, guys? Good morning. Welcome back to another episode here with the Everyday Growth Advisors. I hope you guys are having a good week so far. It has been a crazy run from the bulls, and we've definitely seen a lot of the financial conditions loosen here with FOMC coming about a day back, kind of with Powell becoming a bit more dovish and big developments in the market. So let's run through it and also talk about the possibility of a rotation or what that looks like in the near future. So first things first, let's get through the macro and then we'll touch on a bit of the technicals. If you have charts that you want me to break down for you, go ahead, put it in the comment section right now so that I know how many there are and how many that I need to get to. So yeah, let's get through it. Now, first things first, obviously Jerome Powell came in with all guns blazing on, when was it, Wednesday, and the Fed decided obviously for a 25 basis rate hike, which was what was very, very well expected, but at the same time opened the door for some dovish language. Some of the comments that were, seemed to be dovish were, his comments on how the process of inflation has started, the process of disinflation has started, and also how they have to obviously monitor the conditions, but at the same time, they feel very good about the situation. So that gave the green light to the market on Wednesday after FOMC, about 2 hours before the market closed, to really rip up into this rally and take some additional risk. Now, a lot of that was already pretty much priced in, and so this rally up into 41.50 is not surprising at all. This is the number that we have been watching for weeks. If you've been attending this live stream, you know that we've been talking about 41.50 and then the possibility of 42 and 43 being tested. And we didn't really quite get into the 42, 43, mainly because the breadth of the market was very, very overbought. Now, we would have gotten to 42, 43 if Apple, Amazon, and Google didn't F things up. So, all three of them reported lackluster earnings, and I'm going to do a deep analysis over the weekend to give you guys more information on that on Monday, okay? But for right now, just on the surface, it looks like Apple's sales of iPhones were a little disappointing. But they have set an all-time revenue record for services business, which we have been talking for a long time about Apple making the services part of its business its core part of the business, which would actually keep its competitive moat, especially with such high switching costs for the arsenal of its products. When you're buying an iPhone or the universe of the iPhone products, you're less likely to switch out of it. That's just the one of the economic moats that they have as a benefit. Then you had also Amazon that reported earnings, and Amazon's earnings were also a little lackluster. Even though net sales increased by 9%, their operating income decreased and their net income decreased. So a lot of bottom line issues rather than top line issues. That means to suggest that they have higher operational costs per segment. Of course, AWS segment sales increased 20% year over year to $21.4 billion, which is still their stronghold and what keeps their business, somewhat profitable. So without AWS, Amazon would be a very, very big money losing machine, but AWS keeps the money coming in and get the bills paid. Lastly, we had Google with also lackluster earnings. They had revenues that were up only 1% year over year. But you know what? I mean, expected for a very mature growth company like Google. We don't expect revenues to be growing at a very high rate, obviously. 7 to 8% is already very high. But now at 1%, obviously that's a little lackluster and shows, the effects of the economy and all of the things that are really affecting the top and bottom line of all of these businesses, right? So when you compare Microsoft together with those three, then you can see how it is really a outperformer in the mega cap region. And that's one of the reasons why I said on the previous live streams ago that I do see Microsoft in the future possibly taking over Apple in terms of market cap. So that will be something that we'll be watching, on the sidelines and seeing what's happening. Now, I believe today unemployment rate comes out. I don't know if it has come out already, but I believe it is today. We should be getting unemployment numbers, or maybe it's already out. But there is a bunch of economic news that will come out today as well. So let's jump into the technicals because the macro backdrop is not really super interesting. Now, I will mention right before I get into technicals that a lot of this upward pricing here that we have seen, I've been talking about how the market has been very underexposed to the upside. And so a lot of this upside risk taking that you've been seeing is people adding positions because they have been very, very underexposed to the market. No risk has been taken on. But then in the past 6 months, we have seen increased risk appetite for equities over other areas of the stock market, mainly because I think the main play has always been about first half of the year, we're going to see a recession, and then second half of the year recovery. And so that has really just been the main thing. Give me 1 second. So going through with what the expectations of what the future holds. So let's talk about that for a second, because when we talk about the expectations of the market going into this next phase is we would obviously see some kind of a pullback, right? The market's never going to move up in a straight line. So a wave up here is going to be, met with a wave down. The question is, how is the Fed going to deal with the implications of what it has just done? Remember, what it has just done could be either the biggest blunder or the biggest blessing for equity markets. And so let's talk about that just for a second before I jump into technicals here, because what the Fed has done is they have front-loaded their dovishness to now. And if in the future inflation rises again, then what this is going to cause is a series of pauses. That means in the next Fed meeting in March, we get a pause, and then maybe in when the data comes out again and they see inflation go up again, then that's going to be a rate hike again. So the market's kind of pricing in the fact that we're not going to see any more rate hikes now, and then we're just going to start cutting rates at towards the end of the year, which to me it's obviously very, very unlikely. But I have been wrong, and I could be wrong. But what I feel is I don't think it's a likely scenario, and I think that the more likely scenario is that right now everybody's still in a very exuberant and very optimistic phase about the economy, and therefore they're seeing a lot of what they want to see, in terms of confirmation bias. If you're a hunter in the woods and you're looking for a rabbit to kill, you will see bunny ears. It's as simple as that. And so that's a lot of what's going on with the stock market right now, because remember that the stock market is a leading indicator of the economy. And so it's the speculation and the groupthink mentality of the entire herd that drives prices, not just singular individuals. So I think there's a possibility that we have a little bit of a rate pause, and then maybe if inflation comes back, then they have to rate hike again in the future. So that's going to be a little shaky. And that's just obviously my forecast. It doesn't mean that it's going to be right or wrong. It's just for entertainment purpose. So, okay, now let's jump into technicals. Now, we spoke about 4150 being a very key level. We've spoken about it many, many, many times, and I've spoken how this is the key pivot for bulls. If we really wanted to, get up into this upper levels of 4,300 and then break out here and then start moving to the upside, we will need quantitative easing or some kind of further loosening of financial conditions in order to get up into this area. Right now, we would be bound by this supply zone, which is the possible supply zone at 4,200 to 4,300. That's the interim resistance or supply that's going to come in. But we didn't quite break the 4150 yesterday after a series of very, very long bull candles, right? So we are seeing the market kind of fade in terms of momentum. And today, right, at pre-market, obviously we're seeing a little bit of a downshift here, which is not going to be a downshift until it is one. Remember, when the market is trending in a specific direction, you don't want to, try to go against the trend just yet. Obviously, yes, I played a little bit of the short position yesterday, but remember, that's just day-to-day technical analysis that you're doing in a very small time frame. But when we're talking about these live streams, we're going almost 2-3 days at a time, and it's a little impossible to kind of, guess or predict where the market's going to go. Rather, you have to play it in terms of risk to reward ratio. So that's the way that I always go about looking at these things, because it just makes things mathematical. It makes it in base of a probabilistic nature, rather than focusing on emotions, what you think and what might happen and this and that. And I just don't find that to be a very helpful way to look at the market. I like to look at it in terms of, okay, how much am I risking to put on here? And so right now, the risk to reward ratio is obviously favoring the downside. And so if it is favoring the downside, that's where we want to kind of put our money at, and that would be the move. So then you also want to look at NASDAQ. And so on Wednesday's live stream, I mentioned that NASDAQ had a little more room to run. Why? Because it was lagging behind the S&P 500. This is where the NASDAQ was, and I was mentioning how it needs to get up to the 12,780 level before we see any rejection, because this has been the key point at which we saw supply come in before that. And then above that would be the 13,738 level, which was the previous wave high. Now remember that in a bear market, these big waves up are very common, okay? They're very common, 14, 15, 20%. Well, I think the max is like 17, 18%, but up to 20% is not uncommon for a rally in a bear market before the next leg down. And now, so does that mean that then, you know, the bear market isn't over? Hey, we don't know that, okay? There's no way we can predict that. The only way, what we should be focusing on is looking at how we can exploit the differences in price action and the sector rotations in capital based on where people are putting their money at, and analyze those outcomes so that we can actually get ahead of this market in terms of alpha generation. So in terms of technical analysis here, the rejection on the NASDAQ and the S&P 500 formed yesterday, closing with the pin bar, and today will be very telling to see where we're going to go in the next few trading sessions next week. The pin bar yesterday suggests that obviously there was price action pressuring the market down in a reversal fashion, and today's price action is opening up to be red, but hey, you know, yesterday was a green to red day, and today might close red to green. You don't know. So the only way to go about doing this is if we start breaking this key pivot here at 41.20-ish, then, you know, the next key pivot's going to be 40.60 to the downside, and that's what I'll be aiming at for a possible bounce back up into the 4200. So that's what I'll be watching for today. Okay. Now, having said that, if the S&P 500 and NASDAQ both come down aggressively, which, by the way, the NASDAQ also closed with somewhat of a pin bar yesterday, then what we'll be looking at, you know, things like semiconductors, obviously, to continue, you know, with that pressure to the downside. And since these have had the most, you know, bullish rallies, then, you know, the reversal is going to be also aggressive at some point. So that's what we will be watching for. After all, Amazon and Apple and Google are already trading a little down. Apple is only down 1.5%, probably because of investors still kind of not really, you know, taking their earnings for what it was, and maybe they didn't do that bad, because I haven't read their earnings report, so I wouldn't know. But Amazon seems like, you know, it did a little worse, and so did Google. So we'll be looking at those for continuation, downward plays, possibly fill a gap. Maybe it comes up to close the gap first and then come back down. There's a possibility there. Then you have Tesla that has absolutely gone bonkers the past couple of days. You know, this one has obviously, you know, after that bottom at the $100, has really recovered very quickly. I personally bought Tesla shares at $120, was it? $124, right? I picked up about 500 shares of Tesla there. And so that position has actually already pretty much paid very handsomely, personally, for me. And, you know, it has been nice to have that little alpha generation here. I might, you know, consider taking some profits off or letting it ride. I'll obviously, with Tesla, I'm not looking at like a, you know, a hold forever strategy, mainly because of how volatile the business is. But I will definitely be holding some shares for the long term. Then you have things like the Chinese equities, which I'm watching right now. Baba, with the continued descent here, could really see a possibility of a retest of this right shoulder if it comes down that far. This could send Baba all the way back down to 89 or 88, you know, or around this area, all the way up to $92. Before we see the bounce, because that would be symmetrical with this bottom here where demand came in prior. Of course, that is not the only demand zone. There is another demand zone around the $95 level or $94 level, which it could also bounce on. So I'll be watching for that. So far, I have a short Baba position that I'm playing as a swing trade down with a couple weeks expiry to go. So just betting on that outcome as a possibility here as the Chinese equities start to retrace back. Now, remember, it doesn't have to come down here, so take profits often and take profits early. and then leave a few runners if it does indeed get that low. Your aim should never be to eat the whole fish. Your aim should be to just eat the most tastiest part, right? And then leave the head and the tail for someone else to eat, okay? So that's what I would say always. And that's all I have for you guys today. So I hope that you guys have a good live trading session. I'll be holding a live trading session with the team today. Once again, if you have not signed up for a free trial with us, that is now available. You can visit the link in the description, or I'm going to put it in the comments right now so that you can have a look. You get 14 days free trial with us if you want to take that as a option, and you can check us out and trade live with us on the trading floor. And also, for all of you that have not taken the chance to sign up for our new flagship course, the coupon code is going to run out over the weekend, so make sure you do that. Yeah, make sure you hit that like button for me and subscribe if you haven't yet. And we'll see you back on Monday. I see no charts here that I have to do, so I guess that's where we'll end it. Unless anybody has questions, I'll open up the comment section here for questions, or if you want me to, explain anything, or yeah. I'll give you guys like a minute if you need me to maybe go through a specific ticker, anything like that. T, do you have an update on chart you posted a little bit ago with Goldman Sachs risk exposure or something like that? Yeah, I did post it. It's on the Discord. The exposure is still light. It's still in the light range. It hasn't changed. They're still forecasting light risk. In other words, the standard deviation of positioning. You're talking about this one, right? This one with the Z-score? Yeah, it's still on light positioning. So they're still expecting some kind of a possible downturn. In other words, based on the economic climate and backdrop. Yeah, no problem. Absolutely. All right, I see no more questions. I'm going to end the live stream right here. Have a good weekend, guys. Rest up and come back refreshed on Monday. We'll see you back here. Take care and peace.